Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Man, I'm like all getting ready to start the stream, and then my microphone goes up again. Okay, so I made a couple of changes with like the streaming and everything, so hopefully this all works out. We don't get the crashes this morning, but I'm just warning you, might happen, might have to refresh, okay? And hopefully we fix the issues with the camera. I'm dying too. So let's come over to the charts, because we had some stuff happen yesterday. Where's my freaking chart? Here it is. Okay, so overnight. Oh geez, overnight. Okay, so first of all, we were doing okay throughout the day. Here's the downside that we saw, and then it was kind of like all up. And then the auction happened, and after the auction, the floor just like fell out, and the treasuries got demolished. And I really mean they got demolished. Now the thing is that we were getting some headlines about monetary policy in Japan and changes with the governor, them nominating a new governor and everything, that started to create some selling over here. And I'm kind of wondering if that selling met into some demand for the 30-year auction that was then, you know. Oh, sorry, we got some news here. Was that Canadian? I didn't expect them to react too much to Canadian employment change, but they kind of did. Anyways, I digress. I think that they kind of held off on pricing in that Japan change until after the auction, and that's perhaps why the floor fell out. Now, overnight, you had they made the nomination, and it was the guy that was considered to be more hawkish. So you saw the treasuries in the Japanese yen sell off really hard. But then he came out and he said all of these dovish things. So now we're seeing the treasuries recovery. And when you look at the yields, it actually wasn't too much. So especially over here in ZB, this move was actually not too much. So we're about where we closed yesterday. In the S&P 500, we had a bit of a sell-off yesterday as the yields were rising. So yesterday may have been a pivotal shift in sentiment, and we are maybe now on the downturn. So if we are to come to our daily ES chart, right, I think that your first target would have to be like these moving averages if we're going to start a downtrend. Not saying that those are good like predictive areas or anything like that, just like that's your key benchmark that the market might be paying attention to. Okay, coming over to oil, we had a big rise and now a little bit of a pullback off of Russia saying that they are going to cut their oil output by 500 barrels per day, and OPEC saying, well, okay, well, we're not going to do anything about it. Gold and silver maybe showing a little bit of a response as a flight to safety asset, but not too much. And then we got copper. Copper's still kind of going sideways. So the growth story in China, at least, it doesn't appear to have changed. Then we come over to Bitcoin. Bitcoin getting hammered with the rest of the markets, but still, you know, they're in an okay spot. And then the dollar. I mean, man, the dollar's been all over the place, but that's because of what happened with the Japanese yen. So I don't need to go over that again. All right, so back over to here. So that puts us in an interesting position today here in the treasuries. We could see further recovery off of, oh, maybe the yen is going to continue to be easy. If that ends up being the narrative, then I think that the treasuries maybe recover a little bit today. But I am definitely concerned that there is like some systemic selling in this instrument overall. And if we don't have like auctions and so forth today, that might kind of make things difficult for them. Also, we do have University of Michigan numbers at 10 o'clock Eastern time, so we have that to deal with as well. All right, so I may be a little bit more pulled back. Yet, like yesterday, I took like what, 2 trades, and one of them was a scratch. Today, maybe 1 trade. We'll see. Maybe it really gets moving. I mean, it definitely moved around off of that Canadian employment change news, didn't it? So we can look at that. All right, let's come over to Twitter, see what we got going on. Corsair Gaming shares up 6.5% pre-market after results beat. Really? Nick Timmerose, 42 minutes ago, the popular belief that energy prices have been driving U.S. inflation is not supported by the data. There is strong evidence that rising energy prices were not the main determinant of the surge in U.S. consumer price inflation in 2021 and 2022. And then he links to it looks like a study or an article. Let's see what it is. CEPR. What is that? About CEPR. The Center for Economic Policy Research. Gotcha. Well, I think that's one worth filing away, though. I'm gonna put that on my, I have a little Evernote. I have a little notebook here that I keep track of that kind of stuff with, so I'll put that there. Cool. My eyes are watering here this morning. What's with that? Did I not get enough? I don't know. I always put these water drops in my eyes. But the dog needs a bath. That's probably what that means. He must have been in here last night. Jeez, hold on. That didn't go very well. Sorry you had to see that. Some guy rubbing his eye, especially a guy with huge eyes like me. Oh man. Oh, no, hold on here. I come into YouTube. Is our stream okay here? Oh, Hub says enjoying the live stream. Oh no, it was just me. I was looking at my screen over here and I was like, it does not look right. Cause I did change something. So let's go double check. Close Evernote here. It should be getting the output now. That does not necessarily look like it is doing it, does it? That looks like it started it and it... Oops. Let's open it up in VLC. Maybe it is still recording. I don't know. I guess we'll see at the end of the thing. It looks like it's working. So I was messing around with things, and I was able to get a new thing working finally. Check this out. Look at that. See, I could point here and be like, oh, look right here. You see that? Oh, look at this. Isn't that fun? Green screen. I'm liking it. I'm liking it. Maybe we'll just leave it like that for a little bit. So after that little initial bout of volume that came out from the Canadian employment news, we're just kind of resting here. Treasury's not giving me much clues about which way they're gonna go. Maybe some more flattening coming in, though. There I am getting a hint of flattening in the 2-year. I'm just gonna leave it like this for a little bit. That way when the regulars come in, they'll be like, what the heck? Mohammed A. El Arian. So far, the retracement of the 2 surges higher in the stock/bond prices due to Chairman Powell's remarks has been a function of Fed and data-related corrections to the market's understanding of the central bank's policy. Today's early moves may be starting to reflect supply concerns. Yeah. I really think that yesterday could end up being like a key turning point. I think that yeah, I was reading, like I had commented to Jim Iorio a couple of days ago, I suspect the change isn't being reflected fully in price because of tactical issues. What if Powell is dovish again tomorrow? What if CPI next week is good? Bonds seem confident the call is down, but the rest of the market isn't sure. This is the best place to take it. And like it really did play out that way. Yeah, you're right. We won't keep it like this most of the time. Most of the time we'll keep it like this. But you know, sometimes it might be fun. You know, for dramatic effect or something like that. And hopefully the camera, so I tried testing it yesterday and I had it record for like 2 hours, I think, and it didn't have any problems. But of course, recording it and streaming can be slightly different. But overall, I think the change was worth it because like my CPU usage on OBS now is only 3.8%. So I definitely freed up some CPU by changing to a newer video card with the encoder. Maybe I didn't need to go for a 3060, but it's been a good change. Although one of the problems is I kind of want to record my face in 4K. I don't know why I want to do that, because when I actually look at the videos, I don't like them. My face gets too shiny from the light. I probably need to start wearing powder. But my computer can't handle the 4K. It cannot output the data that fast, apparently. I'm wondering if I need like a specialized encoder to be able to do it at 4K. And I'm kind of realizing though the strain, like the technology has only kind of just gotten to the point where it can do 1080p really, really well. So 4K is probably a little a bridge too far. Okay, we are getting the buying here in the treasuries. Oh, kind of only just now realizing that we did kiss 3.7 at one point. Now we're definitely getting into yesterday's prices, so. Oh. Oh man. You're not driving for once? That's good, Brad. I really hate it when my eyes water a ton. Maybe I need to bring the air the air cleaner in here. Probably need to order a new filter for that too. Okay, so that was a pretty good move off of the lows, wasn't it? It really came from like they were straight up on the lows of at least the regular session, and they just shot right up there to a new swing high. So I think that speaks well for the possibility of more buying today. But I think we should be careful to not to get too excited about it, because that was only about 5k contracts. So that moved quite a bit on 5k net contracts. Right? Nick Timmeros tweeting just now, Japan has decided to nominate Kazuo Ueda, a former Bank of Japan policymaker who has largely supported the policies of Kuroda, as the next central bank governor. Party's over means I'm afraid that yesterday was a big inflection point for the S&P 500, right? So we were getting all sorts of crazy moves based off of craziness, and then I mean it was kind of a little weary all week, but then like yesterday it seemed like it all just came flooding out, you know? So like the dam broke and everybody shifted short all of a sudden. I am again. I'll say this again, and I guess it kind of reflects some of Mohammed El Arian's concerns. Although I think that he's like way ahead of me on this, because like he was saying that the Fed should do a 50 basis point increase last hike, right? Which to me is like, what? That's so dumb. Okay, but the thing that concerns me is that when we are on the upside, when the S&P 500 is bullish, it continues to be super crazy. Like you get like speculative fervor kind of moves. Like the S&P 5, we've been doing this for 5 years, right? And the S&P 500 does not move like that every day, you know? And now all of the sudden, you know, post COVID, it started to do really, really crazy stuff. And we just said, well, that's because they're injecting liquidity into the market and so many more people are trading with the options now. It looks like what has happened now more recently is that all of those speculators have moved over into 0 day to expiration index options. So there was a chart. Actually, let's I don't know if I can find the chart or not. I'm gonna try and find the chart. There was a chart that was, I think it came from Goldman, that was really, really eye-opening for me. Here it is. So the story on Zero Hedge, I'm flipping to a tactical bear now for a few weeks right here, says David Costin, who has been pretty darn good so far this year, and he is the kind of guy that gives us the kind of information we want. It's all flow based, etc. Okay, so this chart right here, man, so this is showing you know how much of the notional money that's traded in the market that day comes from different sources. And look at this, almost 40% is being done in index options, right? At one point, it was only right? 10%, 20%, and now it's almost 60%, right? Isn't that nuts? And it's all coming at the expense of single shares. So these single date to expiration options are having like a huge impact on the market. But like the whole thing is why are we able to have that much speculation still? Right? Even after all of that noise and the tightening of financial conditions and so forth, it seems to me that what happened was it totally slowed things down in the housing market, which we needed because the housing market was crazy, but it hasn't really done anything in the stock market. The stock market still has speculation all over the place. And even though most retail traders have been leveled now at this point, you know, there's been all these stories that all these guys that they were making millions during the COVID that they crashed and they've lost it all. And that like the net flows and everything suggests that the retail traders have taken all of their money back out of the market after getting slaughtered, you know? And yet we're still getting the crazy behavior. Like everybody is just waiting for the Federal Reserve to pivot and then it's going to be game on again. Right? And so I think that what we had yesterday was a realization by the market that it ain't that easy, that a quote unquote soft landing early this year is not such a rosy scenario, because if we're able to match that, I mean, like the whole thing is, if it's so bad, if the market is if tightening financial conditions is so bad for the market, why didn't we get a recession? It wasn't as bad as the market was all making it out to be. And that kind of makes you question if it was really enough to stop inflation, right? Because if we get the rosy scenario, the first thing that's on my mind is, yeah, we're going to get inflation again. And we're already starting to see early signs of it. So, by the way, we should talk about this at this point too. Next Tuesday is the CPI report. That's going to be a big report, but you're going to have to be careful about how you read that report, okay? Because there are methodology changes in the next CPI report. So it used to be that they have weightings and so forth based on the last 2 years of data, and they like adjust that data every 6 months or something like that. What they're saying now is, you know, that this has kind of distorted things a little bit, and so we need something that's a little bit more responsive, because the past 2 years of data is a little wild, right? So it will only be like the indexes will be based off of the past years of data, and it will be readjusted monthly. Okay, so you need to pay more attention to what the market estimates are on this, and you need to be aware of possibly a larger beat or miss than usual. Okay. So CPI is going to be a little bit weird, but the market's probably going to overreact to it either way. So, man, it seemed like the downside was really good, and it came right back up there really easily. It looks like in that instance that the volume came from the 30-year though. It was like they switched over and they bought up the 30. Do you have any good experience? Oh man, there's a lot of people that have done Sierra charts. We might want to ask Discord. They used to have oh well, he's not here yet, but Luke, he was on here yesterday. I think he has a template that you can use that's really good for Sierra charts. Because the issue with Sierra charts is there's like so many settings, and like getting it set up exactly the way that you want is really hard to figure out, right? It may well be a soft landing, but it will most likely be without wheels on the plane. What are your thoughts on ICT trade? I would stay far away from that channel, guys. Guy is full of himself and is on a like marketing spree online, but I don't think there's really any use to what he has, and I think that the it's like a cult following a narcissist, and I would stay away. I don't like, talking about it too much, because this is the kind of person that will like come and start causing you grief because he's a narcissist. And if I say something like that, you get the narcissistic injury. But yeah, so just stay away. Trust me on this one. You don't want to get involved in that. Yeah, it's just, there's just so many, especially with the Dom, right? Like, you can really set Sierra Chart's Dom up to be just like the Jigsaw, but it doesn't come like that by default, okay? it's a pretty difficult one, yeah. Oh, that's right. I banned somebody early this morning. I'm like, why do I have a notification over here? Oh, it's because there was a banning. This person had like a really respectable avatar that made it look like they're a respectable businesswoman, and I'm kind of sitting here wondering, like, did they expect to get that kind of reaction to their spam or not? I don't know. It's kind of weird. Oh yeah, there's everybody's marketing and stuff. It's crazy. It's because they set it up like that. Like, I don't think that he does this specifically, but one of the things that I've seen from these kinds of programs is like, you have to. I saw one where it was like, if you weren't reposting his links and stuff, he removed you from, like, you'd buy the software, and then if you didn't promote it, he took the software away from people. I've seen that happen from another creator. And like, there's just this general, like, you have to promote it for you, right? Which is like a huge red flag when we're talking about trading, right? Like, of course, I want my channel and my stuff to be as successful as it can, but I am in no rush to make that happen, because there are some really big advantages, both from a creator's perspective and from a trading perspective, to being small and to being a close-knit group of people that are just doing the best that they can in a very difficult field. Because then we get like that personal interaction. I'm able to address like every comment that you guys make. Someone just bought 9,000 puts on ZN just now. Interesting. At 111. Where do you get that from, Uzi? I mean, I've seen people talking about that, but for you to have gotten that, you're got to be looking at the you say see me block trade alerts. You just have the website up or something? ZN is the 10-year, that's correct. Just remember though that it's more like a 7-year. Well, they have an app? Oh, I need to go and look at that then. Oh, it sends you mobile alerts. Okay. Well, that's really curious, because I think that short the treasuries on a longer term perspective really makes sense. Like, you notice, oh man. So what do you guys think about the whole swing trade from last Friday, right? I made $50 on that trade. If I had kept it, I would have made $80 more would have made $80 more on that. So it seems like I should have kept it, right? Well, I don't know. A lot of that movement happened on the Monday, and then the rest of the week it was kind of difficult. And on this one, on my sim account, I was like totally willing to do it. The thing is that when I start doing it with my live account, I'm really weary about adding a second contract when I do that. And so then I wouldn't have traded at all this week. So like, I don't know if I would have held it. I don't know if I would have held it. But then the other thing is that I don't know if holding it was really justified. Like it seems to me that the things that moved the treasury market today, or not today, this week, were not the things that I was expecting. You know, it was kind of fortuitous in a way that rates rose as much as they did. You know? Yeah, okay. Octavia says he uses Sierra charts and has the templates for you. There you go. So I'm still torn as to whether or not I should have swung it. I mean, if I had swung it, I would be living large right now, right? But the thing is, I'm still kind of working out my rules on for when I should swing it. See, Futures Trader 71 says that he is in a swing trade, which is kind of interesting. That one, I'm like, so why now? I don't know. Like on Friday, it makes sense that it's like, this is such a big change. Going to be hard for them to you know, because of the price that I had gotten, it was going to be hard for them to challenge that price. And that was kind of why I was thinking about swinging it. How much time it took you to practice with the DOM to actually be profitable? Oh, geez. Forever, dude. So I think that when I started with the DOM, this is such a good question, because I think what I'm going to say is going to contradict a lot of people's expectations about this sort of thing, right? When I started, I don't think that I really truly understood what I was looking at until 6 months to a year in. Like, understanding understanding it conceptually is one thing, but like truly understanding it from when you see movement and intuitively understanding what's happening from that is like a completely different thing, because you're coming in and you're looking at all this stuff, and it's kind of like your brain is a neural network, and so it's trying to make all of these connections constantly to say, okay, I saw this, I make a pathway there. I saw this, I'm gonna make a pathway there. And then as you go along, your brain is kind of like eliminating connections, so that it realizes, okay, that one's actually not such a big deal, so we can just lose that connection, right? That's what your brain does, especially as it gets older, right? So it starts to cut connections that it doesn't need, which is why it's really important to constantly be learning new things to maintain your neuroplasticity, okay? So after a year or so, it was when I understood what I was looking at. And I really don't think that it has been until the last 2 years that I really understood the market well enough to really have a solid read that I do now. You notice now that I have a pretty good idea of where it's going and like what state it's in. I get faked out a lot less than I did 2 years ago. 2 years ago, I always felt like I was being faked out. These days, you know, if that happens, it's like one bad trade and I don't lose too much on it. Unless like some sort of news comes out and it just moves really fast, right? So, yeah, it took me a long time. Now, part of that was because there was a lot of information that I knew and I didn't realize its importance, right? It wasn't until I got more into some of the empirical research and learned a little bit more that I was able to kind of generate this framework that really helped me know which sort of things I wanted to pay attention to, right? And so, you know, for you guys, you have my order flow series that has all of that experience baked into it. So hopefully you can get to that spot a lot faster than me, right? But just realize just the purely the order book part of it it takes a lot of practice. It really does. It takes a lot of practice. This is going to take you much longer than you probably think, because I think most people think, oh, after a month then I'll have a hang of this. Now this is like try years. Like I said, I didn't even realize what I was looking at until like 6 months in, and maybe 2 years was to the point where I was starting to like feel it intuitively. Yeah, how much time it took to practice with the DOM to actually be popular. Now the other thing though is that I started this stream or this YouTube channel in like April of 2017, I think it was. And for that first period of that year in early 2017, the markets were moving a lot and I was in line with the market and I did so well. And I remember like that first, like, especially when I started streaming, the people in chat were like so impressed with how well I was doing and all of this stuff. Like, it was great, right? And then the summer came, and the whole summer, it was like every day I lost. Like, it was terrible. It was absolutely terrible, right? And so that's the other thing, is that you're probably going to go through periods where you do really, really well, and then periods where you don't do so well, largely because you don't understand that particular market. So like the first time around, I didn't realize how big of a change the liquidity in the summer was part of it. And the other things is I didn't necessarily understand enough about the bond market to understand why it kind of moves differently at different times of the year and so forth. And so I just didn't understand those markets, and I was looking at completely the wrong things. So what you're going to find over time is that those down periods become shorter, right? So now I'll have a bad week, for instance, but it's pretty rare now that I'll have a period that lasts more than a few weeks. So. I know people who trade futures in the US for tax reasons, but what is the difference? Yeah, late August, it's really slow. Is like the worst, yeah. That one period where everybody goes on vacation. What party is over? I'm referring to all of the zany bullishness that we saw last week in the equity markets. Yeah, I had the yips in Jan. So for tax reasons, Ismail, what they might be referring to is that if you come in here and you trade and you do lose money, you can write it off on your taxes. And there can be the thresholds. Okay, so there's like the minimum deduction, right? And usually, well, they increase it lately. Before it was like all you needed was maybe an extra $1,000 and then you hit the minimum deduction. Once you get to the point where you can itemize your taxes, then you can take all of the tax breaks too. And that's where you can write off all of these things, like you got solar panels and all of that sort of stuff. So there can be times where it benefits you to, well, let's not say that it benefits you because you're still losing money, right? And I think in the end it doesn't make up for what you lose, but like the taxes can even out the risk reward for you, right? Because if you do lose money, it's not so awful for your taxes, right? So that's why you might hear things like that. Yep, you can only write off 3K losses in a year. Yep, but you can roll the losses that you aren't able to take in a year, you can roll forward for 5 years. So you can come in and you can take $15,000 in losses in 1 year and then just carry those over and you know, count those against your taxes for 5 years, right? So I've never had losses that big though. Like for me, I've always traded so small that when I had a loss, it was like the most it was like $1,000 or something like that. I haven't gone and downloaded the stuff from last year, so I don't know where I stand on this. Because the one that I'm worried about now is that when you don't count the data fees and everything else like that, it was a it was profitable. I hate it when I kind of like stutter and I stop, because I'm sure that like makes me seem less confident and stuff like that. It's not that, it's just that sometimes it's hard for me to speak. Okay, I think that last year I might have been in a spot where overall the trading was profitable, but it didn't make up for the exchange fees and so forth. And I think that I can deduct those through my business, but yeah, I don't know how it comes out. And I'm worried that you could be in the spot where, the account is less than where it started at, but you're still paying taxes on it. I don't want to be in that spot. Right. Now the other side of it. Yeah. Oh, okay. Akshay is already saying this. Yeah. Futures are taxed 60-40 in the US, short-term, long-term. So that's a big advantage. A large chunk gets preferentially taxed. Yes. Yes. So, if you're going to trade, yeah, I mean, really what it comes down to is that, the tax system very much favors you trading futures on a small account, and it very much disfavors day trading actual stocks. Okay. Now, if you want to do market making, so here's another key thing that you got to know. If you're going to do stocks, okay, because in stocks, there's a wash trading rule, which states that if you take a loss, in order to write the loss off on your taxes, you cannot buy that asset back again or a substitute asset for at least a month, or is it 2 months, right? So there was some situations in 2021 where these guys, they like made money from day trading, but they were taking so many trades, and because it was like they were day trading it, they broke all of the wash trading rules, which meant that none of their losses were able to be counted on the taxes. So like, you think about it, it's like you made, let's say you made $10,000 in profits from stock trading, but then you lost $10,000 on your losers, and your net trading was break even, but you're still taxed on the 10,000 because of the wash trading rules. You can't count the $10,000 in losses, right? So if you fit into that situation, what you have to do is on your taxes this year, when you file, you have to file that next year you're going to be, I forget what the term is. I'm sure Akshay is going to tell us, but you file as like a market maker sort of a thing. And then what that will do is all of your net gains will be taxed at the short-term rate, essentially. But you are then taxed differently as a market maker. But the downside of that one is that you have to specify that you're going to be doing that before it all starts. Yep, trader tax status. I think there's another term for it, but I've never done that because I don't trade stocks. It is so much easier to manage an account without the PDT rules. Well, yeah, you know what? I think that the whole thing is, I mean, I don't know everything about this stuff yet, but I certainly learned a lot about it doing that Series 65 exam. And the thing that I think the biggest thing that I learned in the Series 65 exam was like the history of the regulation. And the reality of it is that our financial regulatory framework, particularly as it regards to financial advising and retail trading, was like literally made in the 1930s, right? Like most of those rules came out in the 1930s, 1940. Okay, so we're talking about laws that are like 80 years old now at this point. So this framework was all PDT was introduced in 2001. That's true. I'm not talking about the PDT specifically. I'm just talking about like the whole thing in general has basically been to protect people from themselves. They basically like the whole way that it went down was like, okay, yeah, if you're gonna talk to an investment advisor, you should probably like fully vet them. Like my parents, they got a financial advisor who, by the way, I wish I knew what their name was or I could remember what because they've done such a awesome job with my parents' portfolio. I was just unreal how good they were. Okay, like through the whole COVID thing, they played it right every step. It's just breathtaking. Okay, but how did they find them? They went on this big search. They got a bunch of referrals. They interviewed like 5 different places and then they picked one, right? So like they really did their research hard, right? Most people don't do that. Most people, it's like, oh, there's my buddy. He says he's a financial advisor. I go and I talk to them. They don't look anything about like what they're doing or anything like that. And then they give the guy the money and the guy runs or something like that's what was happening in the 30s, right? And so they made all these rules that were basically like, well, we can't trust people to do their own research, so we, the government, have to step in and protect them from themselves. That's basically the premise of like all of this regulation. And the PDT rule, which actually says was introduced in 2001, is no exception to that, right? It really was like, in 2001, it was probably a bad idea to be trying to day trade stocks if you had less than, is it 10 or 15 or 20? I don't even remember. Shows how much I know about the PDT rule, right? But because of commissions and all of that, it didn't really make sense to trade a portfolio smaller than that. So they were kind of protecting you in some respect, right? But like the costs have gone down substantially, right? But I think, yeah, it's 25. Okay. But I think there's a bigger issue here, which is that their overall goal to protect people from themselves, I think that maybe they need to come back and rethink that, because how does it make sense that you can't invest in a hedge fund, you can't day trade stocks if you're over 25, unless you're over 25,000. There's all of these rules to protect you from yourself, right? But then I can just go and buy Bitcoin, right? Like Bitcoin is the one that like really throws a wrench into it all, right? Bitcoin is the most volatile, leveraged asset. Is just so insane, the things that you can do with Bitcoin. It exists in a completely unregulated world and allows you to take far more risk than any of these other things that the government protects us from. It just doesn't make sense. What do you think? I mean, there could be all sorts of consequences. So I'm not putting this out there as like, I firmly believe that this is what the law should be or anything like that. But what if there were no restrictions on who could invest in a hedge fund? Huh? I mean, why can't people just take their risks? And if I want to put $1,000 in a hedge fund, why can't I? As long as the hedge fund has, certain rules and disclosures that they have to make, so that I have all of the information that I have to make that decision myself, I don't think that the government should have to come in and manage risk for me. Well, yeah, there's friends and family exceptions, but I'm saying, what if it was just opened up to everybody? Anybody could invest in any hedge fund they wanted. I mean, it would be a big change for the hedge fund industry, because yeah, hedge funds want to be exclusive and all of that, but if everybody can get in on it, like the whole thing with I guess it's not a hedge fund, but the whole thing with the Madoff scandal was that it was presented as this hyper exclusive thing, but the reality is that they were like letting everybody and their dog in. and they were making so much money from the feeder funds and all that sort of stuff, like, because historically most people come in when markets are riding highs. They can, yeah, it's true, but are the rules really helping prevent any of that right now? You get what I'm saying? Like you either it seems like there's two choices here. One, you can open it up to everybody and get rid of some of these crazy restrictions, or B, you've got to lock down all of the things that are giving people the insane leverage, right? Like some of the things that retail traders are doing with options. How is that allowed? As it gets back to the one thing in the regulation that I'm absolutely positive needs to happen is that in mark-to-market rules, the impact of your execution should be factored into your mark-to-market, because we are creating these situations where it's very easy for people to build up these huge positions that will just cause chaos, right? I mean, yeah, it's stopping people from going into hedge funds. There are about 15-ish closing shop every fund. Yeah, but I mean, the whole point is that there are a lot of regulations that just don't make any sense when you can go and leverage yourself up on options or leverage yourself up on Bitcoin, right? And the real issue here is that what's happening is that all of the risk is being flooded into these loopholes, essentially, right? So we're getting like really skewed risk taking in the market that's distorting the market. It would be much more healthy if we just allowed people to take risks, you know, and allowed them to take it in terms and ways that made the most sense for them, you know. Everyone has a, but I don't think that the U.S. government believes that, though. Actually, I from the way that I read the regulations say that everybody does not have a right to be stupid with their own money. There is a level of stupidity at which the government has said that we can't allow that amount of stupidity, and we have to protect you. That's basically the way the law is set up. So I'll give you another example. In order for me to charge somebody a performance fee, they have to be what is called a qualified client, which means that they either have $1.1 million worth of assets under management with me, or they have $2.2 million worth of assets in total, right? If it's less than that, then you can't charge a performance fee. You can charge a fee like based on the amount of assets under management. You can charge like a one-time fees to develop a financial plan for them or something like that, right? But I can't charge a fee where it's like, okay, if we double your money, we get 10% of that or something, you know, like the things that hedge funds do. I don't know. Series 65 didn't go too much into what you set up when you're doing those kind of performance-based fees so much, but I digress, right? Why does it have to be like that? Why can't it be somebody can invest $1,000 in me, and if I double their money, I can take like 10%, or, you know, I can have a performance-based fee? Why not? And if I don't make any money for them, then it's just, you know, Of course, there's like big risks with that, right? Because if I get a fee for making the money, then that really encourages me to take on risk, right? Because the only disadvantage to losing the money is that people know that you'll lost when you don't have the performance record, right? Kind of encourages the risk taking. But like, is the way that the lie is set up, is that really so beneficial to us? And another thing is that, you know, again, these laws were made in the 1930s, okay, before the information age. So like that's another thing, is that I think we are justified in allowing people to more leeway to make their own decisions because they have more information available to them, right? Yeah, that's exactly what Charles Ponzi was advertising, but he did something else altogether with the collective monies. So the Madoff thing, I got to tell you, I come back to this one all the time. I wouldn't say that it's like a theme on this channel, but I think because of some of the people that have harassed our channel in the past, I kind of would get fixated on this subject sometimes. It seems to me like the personality trait that will harm you the most in trading and investing is narcissism. Because what happens is you go and you take a big loss, and your narcissistic view of yourself can't handle the loss. You've put all of these hopes and dreams and your personality hinging on this, that you're going to be making money in the stock market. And then when you fail, and hey, like, guess what? You're probably going to fail many times until you get through it, right? Like I said, I would say, like, before you're really making money, give yourself at least 5 years. Okay, most people don't make it that far. Most people don't make it past 2. Okay, but when that happens and you take the big loss, narcissistic people just can't handle it, and that's when they start to do all of this dumb shit. So like Bernie Madoff is the way that it was portrayed, at least in the documentary, and what I believe happened was he took money from some family and friends and invested it in the stock market. Quite risky bet that he had made, and it was like right before one of those really bad markets in the 70s, right? So he lost a ton of money, and instead of just acknowledging that he had lost the money and all of that, what he did was he went and he raised more money from his dad or something like that, and used that to pay back all of the people the money that he had lost. Right? So the whole thing was he couldn't accept the loss. And so what happened after that was that when people started giving him money, he was too afraid to actually go and invest it. Like, think about it. All he would have had to have done is just put the stuff in the stock market, and he would have done amazingly. Like, if he had just invested it at all. If he had in that amount of money, if he had just invested it at all, it wouldn't have gotten the kinds of returns that he was telling people that they were, but he still would have done amazing. Like, that's the insane thing about the whole Bernie Madoff scandal, was that he didn't need to be running a Ponzi. Why was he doing it? Because he was a narcissist. And I'm telling you, man, in trading, narcissism will kill you. You get the revenge trading, you do all of these other crazy things, right? And that's why, you know, sometimes what other traders will do, because like, look, I've come in and I had losses, and it's like, I do this all live, I can't run away from it, right? So I'm maybe protected from this a little bit just because of the nature of the live stream, right? That I'm not allowed to be a narcissist, you know? But some of these guys, what they do is they'll take the loss, and then they'll pretend that they're still being really successful. They'll only show you the results from when they were doing successful, and then try and sell you all of this overpriced garbage to make money instead of the trading, right? Because they're too afraid to trade it. I mean, look, I'm afraid to trade sometimes, but I keep pushing, and because I've been kept pushing, I've been doing well lately. You know, at least since the last August. If we can get through to the August and without counting in the fees and the commissions, it's positive. That's my goal. 1 year of that would be an awesome achievement, I think. Which I know is not what people want to hear when they're looking to become millionaires from being trading. Oh, well, if this guy's sights are so low, why am I listening? But I'm telling you guys, it's effing hard. For a while, he was advertising his fund as being so good and liquid as a money market fund. Yeah. If he wanted to keep that up, he needed to keep withdrawals open, so he was always short on cash. So he wouldn't invest in or whatever came in went out in withdrawals, and most of that money that came in was partially returns and partly that money market withdrawal liquidity, which is attractive. Yeah, I don't think that he was ever going to be solvent with the amount of gains that he was claiming, right? But like the whole thing was, why when people are literally giving you millions and billions of dollars, why don't you just put it in the freaking market? I can't imagine why you wouldn't just put it in the market at the very least. You know, like if you're gonna, like, if you want to run a Ponzi, okay, go and run a Ponzi. But if you're gonna run a Ponzi, why wouldn't you put the money, at least some of it, in the market? I don't understand. You're saying that he was always short on cash? That wasn't always the case. It was the case after a certain point. That's true. It was the case after a certain point. It was the case since yes, but he was doing it since like 1980, right? The Ponzi was already 10 years old by that point. So, you know, it's a point worth thinking about, because it seems to me like the same thing is going on in Bitcoin, right? There are these guys that you know, they've basically been printing money, and so they were like down, and then they get this big run up, and they didn't take their profits on the run up, and then it goes down, and they have to run it again and again and again, and each time that they don't do it, like, it gets worse and worse, right? Oh, project is Ismail. Okay. When I get arrested, I'm going to say Seth. No, I did not say it was okay to run up on. No, but actually, the point I was saying is that he wouldn't have been illiquid if he was just being honest with people, right? Like, the reason that it was illiquid was that he continued to promote these gains that were like absolutely insane, and then people would withdraw money based on those insane returns, right? And so then you don't have enough money to do it. If he just ran it, if he just ran it as, okay, I'm getting money, I'm just going to invest it in the market, and what happens with it in the market, it would have been a legitimate business, and he probably would have done really well. and based on how well he did in his market making business, I have to think that he probably wouldn't have been too bad at actually managing a fund. You know, he wouldn't have been able to get, but that was the thing, is like, he could have run a legitimate business. The point that I was getting at was, he could have run a legitimate business. Why didn't he? He had every reason to just run it legitimately. Why didn't he? Because he was a narcissist. When you go in, when you're watching that documentary, pay attention to the things that the people would say about his personality. He was always really, really hard on other people. He expected too much of other people. Why is that? Because how the people below him performed was he felt reflected on him. It was a part of his narcissism. Bernie Madoff did what he did because of narcissism. He had narcissism personality disorder, from what I can tell. But he wouldn't have been able to brag about managing a 50. Yeah, he probably wouldn't have been able to pull in that as so much money, but he still would have done okay. That's like every small business owner, right? You know, I mean, people working for me are a reflection on me. Well, it is, but the way that he treated people was a little bit off. Like you can tell that everybody that talks about it in the documentary, that it kind of made them uncomfortable because they thought it was weird, but they didn't think that it was weird enough to like think that it was like a psychological disorder or anything. But clearly now that you see that it caused, you know, that led him to basically run a Ponzi scheme, and now you have to go, oh yeah, actually it probably was. Right? And like that's the thing, is that it doesn't seem to me like that what happened was this. Okay. He goes and he tries to manage a fund, and he gets right in at a market downturn and gets savaged and fails. And then he says to himself, well, since the one time that I tried it, I failed, now I'm just going to run a Ponzi scheme. I'm just going to straight up become a criminal and run I don't think that it happened that way. I think that the whole way he was telling himself, I'm going to do this, I'm going to do this, and then he didn't, you know, and it's just like one thing kind of builds up on another until you're running a full-blown Ponzi scheme. Because all because at each point along the way, the thing that causes you to do that over and over and over again is that at any step of the way where he could have said, okay, I have to stop this, you have to make an admission that is too much of an injury for the narcissistic person to make, right? Today's title should be Narcissist Madoff. We haven't been talking about that long. Wanted to make sure. Oh, okay. Lucas, why are you almost 4K in profit? Explain yourself. Because that is a sim trade that has been open since last Friday. So I rode a really good portion of the move on Friday with multiple contracts, and then I also caught the move on Monday with 2 of the contracts, and then I've just been letting the 4th contract run. And it's crazy because the 4th contract has made $1,000 all on its own. So this well, hold on, Spotify, it looks like it stopped here. This sim account right here is supposed to be, okay, if Seth was running a CTA fund with treasuries, how would he play it? And that's what that's supposed to be. Was I saw a number on Friday that was significant enough for me to want to try and open a position and let it ride. And so I took a bunch of risk at the beginning, and now I'm just trying to let it ride. So that's what it is. But it is a sim order. I did make money on it on live, but obviously not nearly as much. If I had traded my live account the same way as here, maybe not loaded up on contracts, but just kept it up as long, I'd be up another $90, right? Because I took it off. I took from 3.6. I took it from 3.55 to 3.61. So I would be up another $80 if I had held it. But I chickened out. Oh, okay. I did miss one. Daniel, I lost 100 on the micros on my account because I didn't use a stop loss because I had 2 trades where I got stopped out, and when I went in my favor after I got stopped, what should I do? Well, so that's kind of tough because I don't know if I have a whole lot of information in there just based off of that. So number one is that you've got to have a stop of some sort. Although you can kind of, I mean, you either got to have a stop or you've got to have so much more money in your account compared to the size that you're trading that even if you get like a really crazy move against you, it's spot fine, right? But when I say you got to have a stop, I'm saying that like if I'm gonna be here in the treasuries, you know, like I usually want to get out in the regular treasury if it goes more than 4 ticks against me, right? But if I'm gonna put a stop in there, like one that just automatically triggers, it's more like a catastrophic loss one, where it's like the market would have to move like 8 to 16 ticks all at once for that stop to actually get hit, right? The emergency stop should always be some sort of an emergency stop. Okay, so I'm just remembering here now at the moment, we do have numbers at the top of the hour. Ueda has a PhD in economics from MIT, and like his classmate Ben Bernanke, was advised by Stanley Fisher. Nick Timmeros tweets. Yeah, actually does it all in an Excel spreadsheet. I mean, he might come in and execute it on a dump, but what he's doing is a really different, right? He's trading the bases. Okay, so the camera turned off, didn't it? Yep. It's too hot. It's too hot. At the end of the day, I mean, don't get me wrong. There's some really valuable information that you can pull out of the order flow, and there can be some narrow situations where the order flow alone will give you good entries and exits. But the DOM is much more useful in kind of like the management of the position sort of thing, finding the best spots and all that sort of thing. And I would encourage you guys to look for things outside of the DOM as reasons for your trades, because the amount of edge that's available for you just from those little scalps is not a whole lot. You're not going to go very far if that's all you're focused on. Yeah, so actually it's not scalping, not really. Even day trades are usually part of a larger position. Because you got to realize that he's like holding the underlying, so he's trading in a different market, but it would be akin to holding a $100,000 treasury bond and then turning around and selling a future. It's something kind of along those lines as I understand it, except for that he's doing it with SOFR futures. So that's the simplest way to put it. That doesn't mean that the things that we're talking about aren't relevant to him, but you just understand that what he's doing is very different. Analysis. OPEC sources say oil rebound more likely this year and $100 barrel or is possible, according to Reuters. Oil may resume its rally in 2023, OPEC country officials told Reuters, with a growing number seeing a possible return to $100 a barrel. Oil still haven't able to reach $80 though. And if the S&P 500 decides to take a dive, by the way, remember yesterday I said I think you go short the S&P here. Let's just say let's do 4150 and our profit will be at 4050. We're not quite there yet, but it's close. So if the S&P 500 starts getting to like 4,000 and we go well below that, I think that you'd see another dive in oil, don't you think? Although maybe probably depends more on what happens in China. Because of course OPEC is going to want to say that prices are going to go higher, right? But if everything goes well, let's say that maybe there is a pullback here, but it's not too severe and the S&P 500 is just fine and oil prices do go towards that $100 a barrel. The hedge funds are, I don't know if this is still the case, but the hedge funds were very short oil. So if that happens again, you could see some wild stuff in those oil producers, in the stocks of oil producers. We could see a trend day if we take the bottom. I think that I see a market that's waiting for the Michigan numbers in 15 minutes, right? If the Michigan numbers are significant, then we might get a big move. But if they're not and the market yawns at it, then you might just see a difficult choppy day. And with the 0 day to expiration options in the S&P 500 and all of that, you should probably expect a ton of moves that are like strong downturn and then a complete retrace and that sort of nonsense, right? So I guess I need to get a fan for the camera here because it just gets too hot. Like when I feel it, it's too hot. That's right. What was it that I wanted to look at when the new OTR had been added, though? Was it that I just wanted to see that treasury analytics? I don't remember. Or was it that we wanted to see if price did something interesting there? You said, do the baskets change during the contracts? Okay, and you're saying they do. Let's just come in here. Oh, right. Oh, maybe that's... Okay, hold on a second. Ultra 10-year. Yeah, so you can see a difference between the on the run and the cheapest to deliver because the on the run has changed. So I'm going to come in here and add a 10-year chart. Let's say 5 minutes. Another argument for formalizing ZN as a 7-year futures. I wouldn't be opposed to renaming it the 7-year futures. But then would it really be ZN anymore? Wouldn't it be like ZS? But ZS is taken, isn't it? So that wouldn't work. ZV. Where did it go? Okay, there it is. What day did that happen? Was that after? That was after we had done the auction, right? Yeah, it is. It is note still. Maybe we need to go to like 30-minute ones. T plus 1 from auction. Okay, so it would have been yesterday. I don't think I'm going to be able to detect what I want here. So I think that the question was that when the basket changes in the main treasury, if you should see a small change between these futures and the micros, which you know are only go to the end of the month, and it looks, you know, I at least during this time we don't see any divergence. They match each other exactly. So I don't know. Yeah, you say got listed at the end of it. So if there was going to be some sort of aberration, I think we would have seen it yesterday, and I don't think we did. I thought that maybe it would be like overnight there'd be a more significant change in this one than in this one or something like that, but I don't necessarily see that. I do see some points where the bar over here doesn't match the bar over here, but that could just be down to liquidity, right? That's just the inefficiencies that you can pull out of the micros that I'm pulling out of anyways, right? So I'm gonna close that. The best places to look for trades on the DOM are the low volume nodes that you see on the DOM. I wouldn't necessarily say that, no. So I think, well, let's just say I've never found any kind of research or any kind of numbers on my own that suggest that like low volume nodes tend to result in better trades or anything like that. In fact, we very specifically tested a strategy where we found a place where there was a change in the, what do we call it? That when there's like a ledge in the volume profile, and trading a breakout of that, and there was some interesting statistical properties of it. It did not match what most trades look like, but ultimately it wasn't profitable. So Oh, it's Josh. Thanks for stopping in. So yeah, Josh's Blue Sky is a new funded trader program, and a lot of these funded trader programs will reach out to me and talk. So we spoke on Tuesday, I think it was, and it was a really fun conversation. So I'm glad to see him here this morning. Yeah, they could also be decimal. Yeah. I think that it's because the 10-year follows whatever is the on the run. So like when the new on the run gets issued, it should just, you know, the micro should just immediately start trying to reflect it. So I think that there is like, you know, like there's a change in the treasuries overall when that gets introduced, but I think that it affects the micros and the main treasuries the same. That I think has to be the conclusion that we come out of after all that. Anyways, yeah, I've done some back testing where we took a ledge and whatever, and it wasn't profitable. So I just don't think we can say it's the case that like low volume nodes or whatever end up being better trades. In fact, for my own trading, I rely more on the timing of it for that sort of a thing. You know, like let's see how this news here in 5 minutes goes, and we might see, even if the news isn't even if it's like all in line with expectations, you might see this move because maybe there's somebody out there that still needs to execute a lot before the end of the week, and they're just waiting for that news to get out of the way first before they start doing it. You know, that's why I pay more attention to the timing. No, so one of the things that Blue Sky is really emphasizing is that when you pass their combine, you are immediately given a live account. There's not like a secondary trial that you have to pass after you pass the first one. They don't put you on some sort of temporary live sim account or anything like that. Yeah, only live accounts, and their qualifications are a little tougher. So like the max drawdown that you get is tighter than some of these others, because some of these other ones were doing like you had like a $3,000 target and a $3,000 drawdown, and this one is like a $2,000 target and a $1,000 drawdown. Is there any other feed that has 15 days trial besides Rhythmic Trade of 8? Well, yes. So you can definitely get one from CQG. You can also get one from who's it called? Hold on, I figured out here. I remember IQ Feed. You can also get them from IQ Feed. Or at least I've done it myself from IQ Feed. Although, just to warn you, if you do it with IQ Feeds, a salesperson will call you and try and convince you into opening an account and spending $100 a month on their data. So, Trade of 8 lags a lot. Well, usually the sim data that you get is not the same quality as the live data. So I think what happens is they kind of have this dynamic system where they have, you know, a bunch of machines, right? And they'll say this group of machines you're doing prod, and this group of machines you're doing sim. And then when there's not enough for prod to handle all of the data that they have to put out, they switch some of these that are doing sim over to prod. So what the result is that the people in sim get screwed. I don't know for sure that that's what they do, but based on the way that I've seen my data feeds perform and so forth, having done lots of sim accounts and lots of live accounts now and everything, I think that's what happens. CQG, no, you can connect directly to CQG with Jigsaw. See, the thing is really, it has more to do with NinjaTrader, right? The problem is NinjaTrader, because the NinjaTrader only offers the CQG continuum, which isn't as good, and then they don't allow anything else to connect to it, and so your only choice is to connect it to NinjaTrader and then forward the data, right? I tell you what, the existence of the brokerage and basically closing it off to everything else is like the biggest downside to NinjaTrader 8, and I think it's really harming the product. It's a way better product when it was open, like at the beginning of this, when we first started this stream. Okay, let's focus on the number here. So 1 year inflation preliminary, we're looking for 4%, and 5 year we're looking for 2.9%. So we've got about 30 seconds. Drop a bomb and get the CME direct straight. Yeah. I mean, if you really want a quality data feed, then you want to go to Trading Technologies, right? I think everybody's pretty agreed that Trading Technologies has the best feed. Well, the liquidity is certainly bowling. Okay, 1 year inflation preliminary is higher than expected at 4.2 versus 4%. The expectations and the sentiment are also, oh, well, sorry, not expectations, but sentiment is higher than expected too. So that's, yeah, that's not going to be good for our treasuries here. Well, I mean, it's going to be really great for my sim position. DT and IQ, yeah. I'm going to leave the camera off for a little bit because it's just too hot. Maybe I will, well, I don't know, we'll see what the output that I got out of all of this was, but I may need to, I can either get a fan or I may need to just switch it back to being 1080 from 4K. Well, so let me see here. I think that news that was just released should be negative for the treasuries, but they seem to be taking it in stride and not actually moving that much. So I don't know if we actually have a trade here. IQ feed, rhythmic, CQG. Gain is the other one. I'm not really very familiar with them. I thought that you could do it with Trading Technology, but what's the name of their feed? Maybe that's Gain or so. I don't know. Oops. Welcome to the stream, Tarnosaurus. Tarnosaurus? That's an interesting name, my friend. Yeah, it is selling. You see, as soon as it was like they were all waiting for Seth to say that to sell it, and then they went. The 5 year is definitely selling it, so okay, so we are getting some interesting back and forth here at the lows, but so far it's not going, so it looks like I wasn't the only person sitting there waiting to hit it, though. There was some other retail orders that went through there at that time. Oh, that's funny. They're saying, how do I do this? I'll do this like this. Okay. My new squawk is just saying that the 10-year yield hasn't changed very much, and I'm like, well, you just wait a few minutes. That might change real quickly, bud. Let's cool down a little bit. Let's wait another 5 minutes. 5 minutes should be enough to get it to cool down. And definitely I will go get a fan. And go get a fan and put it on it and see if that helps. Hopefully the fan won't be too loud. And we can always just bring the quality back to 1080p. Okay, so we're getting a little bit of pushback here volume-wise. So just to reiterate, the 1-year inflation preliminary was 4.2 versus 4%, so that's bad. 5-year was in line at 2.9 versus 2.9. The conditions were 72.6 versus 68.5, so sentiment was 66.4 versus 65, and expectations was 62.3 versus 63.1. So it's kind of like everybody is still really bearish, I would say, about the future, but the conditions are better than expected. And the treasuries are moving pretty freely through this area right now. So that makes this a tough trade. Inflation uncertainty as estimated by the range of middle 50% in inflation expectations is at all-time highs. Huh. It seems like the dollar has been doing okay since that news. Greg H, his name is familiar. You've commented before, haven't you? Like, I think you've commented on videos. You used TT back in 2000. Well, that was a long time ago, Mark, my friend. Now in your third year trying to trade E. Oh, geez, yeah. Oh, in Discord. I gotcha. Why all ES? That's interesting that you switched to ES, though. I find trading the index is so difficult. I'm still so I didn't take a trade or anything like that, but the call I made yesterday was short from 41.50. But we haven't gotten to 40.50 yet. It's possible. I mean, it's only a skip down there, but so far it's not going. So far it's not going. Well, I would have much preferred 3.7 than 3.705. And the volume has died down. This isn't cooperating. I'm not so far not seeing the flows that I wanted to see. Maybe we just need to be patient. It does look like there's more of it in the 5-year than anywhere else. But you can see that even at 3.030 half, that it's kind of like it's not going offer, right? So I'm debating with myself if this is market maker shenanigans or if there's buying in here. It seems to me like there is not nearly as much flow as I anticipated. There was a good take on the downside there, so when a downside might start here. Now 30 half goes bid again. So it kind of looks like they're pausing here at 30 half and wondering if they even have enough if they wanted to break out of it. It sure looks stuck, doesn't it? You know, Luke's not. I think his name on Discord is Luke. He might not be on there at the moment, though. Because he was chatting in the interest rates channel yesterday. Or no, it wasn't Luke. It was Octavius. Octavius too, and is in the interest rates channel. Yep, Luke Nuke was and Octavius. They're both in there. Just look in the interest rates channel, and you can like message them. Like right click on their name and message them. And they might not be online right now, but is this where you can see block trades? What are you talking about? Oh, well, earlier we were talking about there's a CME application that where you can set up for alerts and it will send you texts when there's large block trades. I don't like that. S&P 500 turning bullish here. Some more stuff happening in micros here. The bank has calculations that they do. Well, there's a lot of work and trying to estimate volatility, but obviously the correlation between implied volatility and realized volatility are very tenuous, right? So, which is to say that despite all of their estimates, they're not the best estimates. I mean, like, they're really impressive, but even like really impressive, it still doesn't account for like half of the movement. Yeah, you turn on the micro and the 2 and the 5 year are almost 9 ounces. Well, the 2 year isn't bad right now. The 2 year is fine. The 5 year though is like, what the hell? Like, nobody trades the 5 year anymore. I'm also a little bit distraught by how wide the spread is in the 30 year. But it, what you will see happen though is if I went into the 5 year and like executed something, well, I don't think that I would sell 3.5. But where are we? A little bit higher. Oh, there's not even any, there's like hardly even any liquidity being put out there. So what will happen is these robots are like, they have certain thresholds to even turn on. So like if you bring the spread in the 5 year to within 10 ticks, then the robot turns on and it's fine. Is usually what happens in the 5-year. Or if you came in and you just started executing volume, you'll start seeing other volume. It's kind of funny. So like if you have a reason to do something in the 5-year because of some sort of spread trade that you're putting on or something like that, then the market makers to help facilitate your trade do materialize. But it's a pretty bum deal, what it looks like right now, ain't it? Well, so this is really interesting. A lot has gone through at 30.5. There are at times where so like right now, right there, that bid kind of looks like liquidity hole, right? Really looks like liquidity hole. But I am seeing some strong bids and offers put on there too. So it kind of feels like there's a little bit of a liquidity hole, and like there's some people that want this to move, but they're too timid about it. So maybe the liquidity hole just holds. I don't know. But overall, this trade has sucked. I have not gotten any of the continuation that we wanted at all. Your micro 30 should have about 18 to 22. Well, that might be true. When people are actually trading it, though, the spread is much less than that. Like nobody's executed on the 30-year today, but we've seen days where there has been executions on the 30-year, and the spread was, in fact, I've seen the spread as narrow as it is over in the 10-year sometimes. So. Just for some reason, they're not interested in trading it today. I mean, for that matter, I'd say that the volume in the micros on the 10-year is pretty light today as well, isn't it? Sure. I think that 22 ticks is probably the largest I've ever seen it in the, well, let's not say the largest I've ever seen it, but it's not unusual to see it at 22 ticks, yes. So that would make sense that based on what's in the cash market that they'll hold at least that spread, sure. Yeah, that's definitely a liquidity hole at 30.5. I'm surprised that it formed like that so quickly after the news, though. That's a little weird. The previous on the run had a DV of 01. And that will come down as we get closer, right? I mean, the funny thing is that we're close to a time where we have to start thinking about the rollover in the futures, don't we? Let's see. So it'll be, well, it won't do it until the 24th, right? 23rd and 24th. So we'll definitely get, like, next week we'll probably get the full amount of like activity over in here, but then after that we'll have to start thinking about the roll. I'm gonna turn the camera back on. There we go. So we did move back down here. It's not a new low yet. Volume wise, it's still kind of not too much. So that could just be market maker stuff. Could be worth trying to see if it goes to the downside, but Carl Quintilla, University of Michigan, is the second upside inflation figure of the week after Mannheim and will create further fears into CPI next week. But bonds have repriced, and at this point, the market could cope with a CPI that's a little but not a lot harder than feared. Okay. The whole thing is that number, I think, should drive selling, and it really hasn't. But there could also just be selling into the end of the week. That's the other thing. I haven't really seen too much movement in the dollar today for Friday. You're in a 25-point drawdown? Ugh, I can't. That's too much for me, man. I can understand how you might be feeling right now, though, because the buying in the S&P 500 kind of felt like it came out of nowhere and was certainly not what I was anticipating. But that's where I'm just like, the S&P 500 just tends to do that. It just does random shit. Yes, the COT report should definitely be interesting. We want to pay attention to what the change is in the Treasury positioning from last Friday. Convert. Just double down and then average out the difference at break even. Yes, your reward is break even and your risk is your whole account, but it usually works out. Where do you get your COT data? So, I mean, there is a place on the CME website that you can get it, but what time is it at? I think it's at about noon Eastern time. I can't recall what time it happens, but they release the weekly commitment of trader reports out there, and then you can pull them in. So in NinjaTrader, there is a feature that lets you view them inside of NinjaTrader, and they just pull it off of the CME website. But I don't recall which time it is. And note that the report that we're talking about is only showing us the change in positions from starting from last week. So the data that you're getting is like a week old. But this time I'm more interested in it than usual because I want to see how the positioning changed last week. Because there was a lot of shorts already. So, yeah. Snobble says that the return to a low inflation environment is not the baseline. No, it's the CME's data is delayed by a week. Basically, what they release is what the commitment of traders were last Friday. Because if you gave traders current data about what everybody's positioning is, that would be a problem for some traders. There's a little stack there at 29. Curious. Okay. Interesting. So there's a little bit of posturing going on here at 28.5 and 29 in the 10-year treasury. So you could see it ticked down. The offer wasn't super strong, and then he did stack it, and the bids at 28.5 weren't pulling or anything like that. So eventually the offer stacked to be more than the bid, and as soon as that happened, the sellers hit 28.5. So now the bids didn't pull, so it looks like there is, like, we are still kind of reeling, I think, from this liquidity hole that formed at 30. Seems like the sellers were able to push us down a little bit, but they're having trouble getting to the lows because there is some leaning going on at 28.5 and 28. What do you mean by a liquidity hole? So if I come over to the chart, let's just look at it on the chart first. This isn't the way that I would identify it, but I'm trying to show you something that would probably be more recognizable to you. See this area here after the news where it just was like flat? It was just stuck in this area from 8:06 to about 8:17. So it was like 10 minutes where it just didn't go anywhere, right? And there was some volume traded in through this, but like it was just stuck there, right? And if you go back on the video and you look, you'll find several points where it's like it ticks up and they can only put 100 contracts up. Then it ticks down and they can only put 100 contracts on the offer. And it just goes back and forth there several times on very low liquidity. And then like maybe they take 30, but it doesn't hold. And they immediately stack more. And so it's basically this spot where there's not a whole lot of liquidity being put at 30.5, but there is a lot of offers being put at 31, and there is a lot of offers being put at 30. And so price just gets stuck at 30.5 for a long time. And what is happening there is something has happened. There was a lot of executions. Note it's the point of control now, right? The liquidity in that area had become exhausted. And so you have the liquidity here is exhausted, but then you go above, there's more liquidity, you go below, there's more liquidity. And so price just gets stuck, right? And so that's why when we did move out of it, and it looks like we could be moving out of it because of the dollar. But when we did move out of it, there's still people leaning against it. The liquidity is basically kind of making it difficult for the short right now. Now, if we bust this big order at 27.5, then we get into a kind of a different zone, right? So I would expect that there probably should be at least 2,000 contracts trade here at 27.5. But then after that, probably the amount of liquidity being willing to be put up at these prices lower might be less. Okay, so the order at 27.5 moved down to 27. Did you see that? It was only 935 contracts to trade 28. Let's see 27. Well, there's a bit of an offer there. There's some iceberging on the offer because the offer 1,000 have hit into it. This offer has been solid the whole time. Okay, so there's at least the 2,000. It looks like it's going to be 3,000 or 4,000 actually. So does that make sense? Like, I'm sorry, I had the wrong screen up, but there are kind of some things about individual prices where you can kind of guesstimate how much liquidity there actually is there to trade, right? And so there does become a point where the liquidity dynamic changes, and it's probably somewhere below 27.5, 27, where it starts to get a little bit easier for the sellers to keep pushing it. Yeah, okay, so on that one, there was some liquidity at 27, but like most of it pulled, right? And look at the offers. The offers are really solid on every tick down. And the selling is getting a lot of market selling. There you go, 1,700 contracts. I wish it was less than that, but that's not too bad. Look at it over here in the 5-year too, by the way. There's not much fight of it in the 5-year. The 5-year is just dragging them down. It looks like we may be getting a flattener here. Okay, well, when I got into this trade, I said it kind of sucked. So it looks like what happened was a liquidity hole formed almost immediately after I got in the trade. So that time I stuck with it, and we did get the flow that we wanted, but we're not getting paid too much from it yet because we're in a flattener. Because the curve is flattening, the 30-year is not coming down as quickly. And so we've only made $5 from it so far. So the question now is, we did get the flow that we wanted. Will we get enough flow to really make a whole lot from this is the question now. How do you know it is selling though? Is it not only bids and asks? Where can you have buy or sell bids and asks? Okay, so I don't understand your question, but I think that this will answer it anyways. So when you look at what we have here on the DOM, okay, the blue column is limit buys and the red column is limit sells, right? And the two middle columns are market orders. So what happens when the data comes into us is the data just says there was an execution at 27.5. So because 27.5, or let's say 27 now, is the best bid price, we know that if there was volume executed at 27, that the market orders were sells. That's how they sort that out, right? So when I'm talking about they bought it or they sold it, I'm talking about the market orders, because the number of buyers and sellers overall is equal, right? But the market orders are more aggressive. So when I say they sold it, right? What I'm looking to see is there's going to be a lot of people that want to sell it, and so they're going to have to move price down in order for all of the people that want to sell it to sell. Is kind of what I'm saying when I say that, right? Oh, you thought it was limit bids and no. Yeah. So that's why, like, when I come in here, the thing that I'm going to be looking at, because when I'm talking about a flow, it's the market orders that I'm most interested in if a flow comes through, right? So we've had about net 5,000 or so contracts sell, right? I would like it to see more like 10 to 15,000. So I think we can justify holding this a little bit longer. But just note that it's still a little tepid, right? Looks like on that move that the 30-year got to its lows and it accelerated a little bit. So now we're getting a little bit more of a help. This is what the spread is doing here is really key, because if we're flattening, you just can't expect as much profit from it. But look, on that one, since we reset our DOM at least, look, the 5-year is maybe down 1, and the 30-year is down 2 or 3. So that's kind of curious, because what started the move was some flattening, but now that didn't move the needle too much on the spread, and now we're seeing some signs of steepening. So we come into another one of those situations that I'm trying to identify to you, actually, where it's like, this is the point where, like, I want to know what the spread is going to do next, and I have a really hard time predicting it. Seems like we got a decent excursion on the downside there. We might get some continuation on here. It looks like the spread should be moving, and it hasn't yet, and I really want to know what it's going to do next. It says no idea, and I know it's hard, and it probably is hard. There's probably not like some easy rule to be able to predict it every time, but that's the challenge, right? This is the situation where we want to be able to predict the spread. Yeah. No, what you told me is will be really useful, but it's kind of more of a higher time frame thing, right? So let's just come over here to the chart real quick. Here's our volume profile. So we haven't approached overnight lows yet. That's at 25. We're getting awfully close though. So if we get below 25, we might see a further acceleration, but that's a spot to watch out for. There might, I'm going to be cognizant of some people leaning on it there, but look at the spread. The spread decreased yesterday and then came back up in here. And now today it's actually a little bit steeper. So it may, I think that the call I'm going to make is that the spread is going to steepen. But now we have to come and look at ZB. ZB is below yesterday's low. What is that volume profile? The indicator that I'm using is called CAMS. We posted it on futures.io. How does the spread affect price? So when we're talking about the spread, what we mean is all of the treasuries are going to move, but so if we're saying steepen, that means it's going to be up and to the right. And if we say flatten, that means it's going to be down and to the right, right? So if we say that it's going to steepen and we're moving down, that means that the 30-year is going to move down more than the 5-year is going to move down. So if I'm in the 30-year, that means that I'm going to make a little bit more on my short trade than normal. And if I'm in the 5-year, that means I'm going to make a little bit less on my short trade than normal, right? But it's going to be the opposite if I'm taking a long. If I'm taking a long and we're steepening, then I'm going to make more on the 5-year, right? So number one is that it's going to, like, you may have to adjust your expectations a little bit on what your expectations are, right? In other words, like normally what a trader does is they kind of have an expectation of what the volatility is to say, this is how much I can make. This is where I should take my profits, right? Well, you can kind of adjust those a little bit based on which way the spread appears, if the spread is trending in a certain direction, right? The other side of it is that you can kind of discount certain volume, right? If we're moving down and I'm seeing absorption in the 5-year, I can ignore it because that's just the people buying the steepener, right? I don't know. It looks like I got a really good move there, but I didn't, it's still being difficult. That might have just been the little pause that the market maker has to do. I don't know. But I'm getting close to the time where I have to quit for the day. So I would have very much have preferred it to go to the 20 bucks. Yeah, if you're going to trade the treasuries, you've got to watch those spreads, I think. Because otherwise, what you're seeing in the flows, without that context of the spread, what you see in the flows will really mess you up. And it definitely looks like it is deepening, guys. I mean, it's just starting, so I wouldn't say that it's decided that that's what it was. It was a steepener, but so far it's been steepening. Overall though, man, do I have to take so I don't like that. Saw an order go off in the 30-year. That was interesting. That's the first one in the 30-year there, right at 3.783. Looks like a market maker put an offer out there that he probably shouldn't have, and somebody took advantage of it. Good for them. Now, whether they make money from it is a different matter entirely, but good for you if you were the one that did that. I hope it works out for you. We still got 20 minutes, right? The Knob Knoll gravy train is, oh, it's not available anymore. That one guy is going to get screwed the entire market up as the market makers blow everything up to keep him from making money. Yeah. I guarantee, just watch it. That bid in the micro 30-year is going to be a little bit reluctant to come up. Well, it looks like we may be getting another wave of selling. Still a little tepid. On this particular move, haven't really seen a whole lot of participation from the correlated assets. It looks like it is isolated to the treasuries. Even the S&P 500 hasn't really been reacting to it. Well, okay, they tried to sell 26 half and weren't able to keep it offer, but they corrected the ARB. Interesting. See, this is a situation I've dealt with several times in the last 2 weeks, which is I have a profit. It would be an acceptable win, but it's certainly not as much as I would have hoped. And I'm afraid to take it. And then what happens is I take it. And after I take it, then the move happens. And I should have held it, you know? Yo, Seth, what are you thinking? That's what I'm thinking. That's what I'm thinking right now. Thinking I maybe should think about taking my profits now, but I bet you that if I do, I'll regret it. Jim Iorio says the construct of breakfast food is absurd. You take that back, sir. There are certain foods that are best eaten in the morning, and it's some of the best foods. Don't you disrespect my waffles. 33.90. So some absorption at the lows. There's still some leaning on the lows, right? I want to work with getting a range indicator over time and then use that data to find imbalances. What do you think of that? Okay, so you used some words there. How would you use that to find a quote imbalance? So the thing is waffles is a brunch? None. Waffles can do many different great things, and waffles do not have to just be eaten at breakfast, but they are a breakfast food. They are the quintessential breakfast food. Well, really the quintessential breakfast food is pancakes, but waffles are just better pancakes, really. Think about it. Is there a liquidity hole at 31.5? Could be. forming. It could be. I would say it might be a little bit too early for another liquidity hole to form, but yeah, we got to be worried about that, right? Now for me, a liquidity hole is usually a really good place to take an exit, right? So you live next to Belgium. That's right. So I have a question about the Netherlands. Are there different Dutch accents? Because I've noticed that some Dutch DJs speak English and it sounds pretty good and normal, and there are some Dutch DJs that just sound absolutely awful. And I'm wondering if it's a difference between just how good they are at speaking English, or if it's a difference in their Dutch accents, that there's like a Dutch accent that's like way more severe or something. You think all sorts of stuff. Well, see, look at this. The bid in the 30-year has not moved up to where this guy can even scratch it. All right, when she wants me to hold the baby, I think I will. I'm gonna take it so I can hold the baby. The good clear accent is from Randstad, the Amsterdam Hague, Rotterdam, Utrecht Circle. Ah, that would make sense. Of course, she gives him to me sleeping, and the instant he detects that somebody else is holding him, he wakes up. Outside, that is very, quote, Dutch sounding. Okay. Well, look, as soon as I got out, you saw other people buying it at 3.718. So, yeah, you better enjoy this, because I got out of a winning trade for you, my bro, just so I could pay attention to you. You're like, oh, Dad, don't say that. Check this out. For you guys that missed it earlier on in the stream, check this out. Look where you are over there. See this? See this bit over here? Yeah. Oh, you want to play with the micro? I see how it is. I see how it is. How good was the price that I got in micro terms here? 718 was good. It was good. For the moment that I had, it was good. I'm not seeing a continuation of the downflows, and it does look like we are forming another liquidity hole down in here. Yeah, there's in this case, it looks like there's just some people that want to execute on both sides, I guess. Yeah, he wants to grab the mic. Yeah, the deeper the liquidity hole, the more significant it is. That's, yeah, and the more stuck it and frustrating it is. But like I said, a liquidity hole is a good place to take a profit, because you know that at that point that it's probably going to be stuck there for like 30 minutes. And you don't know what the next leg is going to be, right? And if somebody wants to, here's the key here to this one, okay? If somebody speculative wants to take it the other way, so it's moving down and there's somebody speculative and actually they think that it should be going up, right? Is almost as soon as you start to see that sort of like liquidity hole sort of thing starting to happen is when you want to take it the other way, because this liquidity above you is probably is still damaged, right? So you don't want that liquidity to start forming up above you. You want to hit it before it happens. Your trade will have more impact. So if you're speculative and you want to move the market in your direction, right? You want to do it right after that. That's why you get all of those moves that it seems like it bounces so quick and it's like you miss your profit taking opportunity, right? So if you are not 100% sure that the move is going to continue, the liquidity, like the first signs of the liquidity hole, is a really good place to get out. And this is a good thing just to keep in mind in general, because as you get larger and you have to, you know, execute more contracts, just know that you're probably going to be able to execute more volume in that area. So again, you'll have exit liquidity if the hole forms. Okay, well, they did push back down to the bottom. I'm still seeing a lot of volume trades, so I think I'm okay. I mean, let's see. Maybe in the next 5 minutes it goes, but even if it goes, I think there was only like $5 more in that, so I think we're okay. Helps a lot. Yeah, well, and no, I had nothing to do with the moving average. It was entirely so number one is that the Japanese yen has been moving around a lot the past day. And so I'm concerned about what the weekend flows for the currencies could be. And so I was thinking that could push the treasuries down. And then we got that consumer confidence number where the inflation number was higher than anticipated. And that is the entire reason why I took the trade. That was it, period. What? Like frankly, if we were at some moving average right there, that might have made me less likely to take the trade, because the tendency is they just jack around with those prices, right? Okay, they're hitting 25.5. Timothy Liu says we should get actors to mimic open outcry in the pit the same way we have actors for the Civil War reenactments and medieval fairs. I'd totally be the dad wearing shots and a Hawaiian shirt taking pictures of everything if that were a thing. That would be cool to do live reenactments of dude, we should organize it. We should organize it. We'll give everybody fake money and then they can come in and trade for the day and open outcry. Give everybody jobs and stuff. Sorry, your head is. Let's move you over to here. You see yourself over there? Huh? You see you there? Look. Yeah. Oh, it's gonna go. It's gonna go. Totally agree with you. See, I was gonna say let's get on VR chat and make it happen, but now I'm thinking no, it should be a in-person thing, because I think that I should get to have the experience of trading on an open outcry floor. That's what I think. Okay, you grab the mic, that's fine. It's made out of metal for a reason. Honestly, if that happens, I will just fat and wear my helmet 23 hours a day. Oh, you're saying that you'll fixed income retire early and then take a job at the The LARP exchange. We can call it the LARP. There you go. Or we can call it the CLARP. Because we could have it in Chicago or New York or something like that. It's really hard to hold you over there so your head's not covered by the microphone, buddy. And it doesn't help when you're trying to lean over to the right. You bored? Here. Here is a piece of wood. Isn't that a great looking piece of wood? I think it's such a nice look. We gotta finish that table. We're getting close. Of course you can eat it. Okay. Oh, you were talking about if the VR pit became a thing too, yeah. Oh, they were trying to make one, weren't they? I don't know. I think the way to make something like that happen would be to make it in VR chat and just have guys pretending to do it. And then the CME would take notice and be like, hey, you want to work for us and help us set up the real thing? And then I think I think it would work better as a grassroots movement, let's say. But ultimately, though, like, here's the thing. Ultimately, I think that a lot of the advantage to moving to the electronic markets and a lot of why it happened so quickly was because they liked the anonymity. And part of the reason why I would love to have a VR chat styled environment would be to possibly get rid of the anonymity again. Do you notice, though, that he reaches for the mic way more? Of course not. He woke up as soon as you put him in my hand. Oh, how did he get this out there? I put all this effort into putting lights around the chalkboard here. It did look nice when we had it, but the little controller for it kind of broke. And well, if I put a limit order out at 718, I could maybe get a fill here still. It looks like it may slide further, but it's probably going to happen after I'm gone. No, I will put the Brad Pitt as my avatar and trade that way. No. Well, okay. As long as you always have to look like Brad Pitt, right? So I might not know who you actually are, but I want to be able to tell that that's the same guy that I traded against yesterday, right? Like I want to know, you know, you start working for JP Morgan or something. I want to know, okay, the JP Morgan trader, he looks like Brad Pitt, you know? Or all of the guys from Credit Suisse use deformed Knuckles avatars, you know, something like that. Oh, you guys are so nice to the baby. Thank you. Today's Brad Pitt from Inglourious Basterds, tomorrow the one from 7. I keep trying to get my wife to watch that movie and we just haven't had the chance to do it. I think she'll hate the movie, but I think that it'll be a fun watch. 7. The bit also had the benefit of noise gets, yeah, you know. You can see it from the movement though. You can see from the movement. There's been a lot of tools to try and do that, and I actually spent a lot of time looking at that because there are some things that your ears are better at picking up for sure. Especially when it has to do with like timing and like speed of response. Sound is generally better than sight. But every time I get into the technology and everything, I kind of feel like that it's not worth the effort. It looks like it's going to go further, but it is time for me to leave. So I'm okay with taking $10. especially since that wipes out my loss from yesterday, because I was a little peeved about that one. Watch, I'm gonna leave, and then it's just gonna keep going, and we'll end up all the way down at like 112.18 by the end of the day, and I'll be like, oh, I should have just held it, and all this feels so bad. Okay, see, look, here's my chance to get in again. There you go. But I won't. I'm gonna work hard today. Turn it into a swing trade. I mean, in all seriousness, I think there is a decent chance that where we are at on Monday, when we come back here on Monday, that it will be lower than where it is right now. It's serious, don't you think? I mean, oof. But I don't feel ready. I don't know. It scares me so much. What scares me is having to think about it all weekend, and especially like during work and wanting to have to manage it during work, because anytime that we're outside, basically I could continue trading for another hour, but like anything after 10 o'clock, it's like my decision making is way worse. So like, you know, I'll come in on Sunday and want to do something, and then I want to, you know, it's really. And the other thing is if I'm going to do a trade like that, I really have to plan out like what's happening in the future. Will I be able to actually hold this as long as I want and so forth? Because what's happened to me when I've really tried holding them is like I am right, but in the interim there was an event that screwed it all up. It was like I didn't have the constitution to hold it through through it, like retracing all the way from some other big news that in the end wasn't, you know, didn't matter. You know, in this particular instance, you know, if I was going to take it here, I think that it would have to be that I think interest rates are going to rise after Tuesday, you know, because I don't know if I'm going to get enough just from the weekend to really justify holding it. It's not behaving so far in a way that says that I'm going to get a ton more out of it, but there's certainly that doubt in my mind. Like, I think it's going to go further. But no, I don't want to worry. I want to work hard today. So that's why I'm going to not take it off. Because if I don't take it off, I will just be focused on that all day instead of work. So see you guys on Monday, and we'll talk about how I should have held it. In the meantime, stay excellent, team.